Hello everyone and welcome to QuanX. I am your host Prasann Koli here to bring you the latest stories shaping India's financial wealth. Let's dive in. But first, a quick word from our sponsor. QuanX News is brought to you by QuinTalk Solutions, a emerging IT startup driving innovation and trends. Discover more at quintalksolutions.com. So, today we are first diving into some significant insights from Association Mutual Funds in India or AMFI regarding May's investment trends. The data reveals a continued strong appetite for equity investments, even with some interesting shifts. Overall, the mutual fund industry saw its asset under management or AUM rise impressively by 72.2 lakh crore in May from 70 lakh crore rupees in April. A substantial deliverer to this growth was equity oriented funds, which contributed nearly 65% of the total inflows into the industry. During May, the Nifty and Sensex both gained around 2%, while mid-cap and small-cap indices showed even stronger performance, rising around 5% and 10% respectively. The industry also saw 19 new fund launches, which collectively gathered around 4,170 crore rupees. The thematic and sectoral fund accounting for 43% of its new collection. Equity mutual fund marks their 51st consecutive month of net positive inflow in May. While the inflow figure did dip to 19,013 crore rupees from 24,253 crore rupees. This continued contribution pushed the equity category's AUM to 4.83% to a significant 32.05 lakh crore rupees. One of the key positive takeaways for equity investors is slowdown in SIP stoppages. The mutual fund asset climbed at 14.61 lakh crore rupees in May, consulting over 20% of total industry AUM. Crucially, the SIP stoppage ratio, which reflects discontinued SIPs relative to new registrations, fell dramatically around 72% in May. This significant improvement from nearly 300% in April. AMFI chairperson Vikent Chelsani had previously attributed April's high stoppage ratio to one-time recalculation and removal of inactive accounts. An activity that concluded in April. May saw 54 lakh new SIP registrations against approximately 44 lakh discontinued or mature accounts. While equity inflows themselves saw a bit of slowdown, they remained a cornerstone for the overall mutual fund industry's growth. Jitendra Pal, CEO of ITI Mutual Fund, suggested that this moderation in net equity inflows could be due to combination of key factors including profit booking after a strong market performance in May and risk of sentiment fueled by rising global volatility, geopolitical tensions such as India's Operation Sindoor against Pakistan and ongoing global inflation concerns. Interestingly, there was a noticeable dip in flows in large, mid, and small cap fund categories, all experiencing double digit declines. Large cap fund inflows dropped by over 53% to 1,250 crore rupees. Small cap funds saw nearly 20% fall to 3,214 crore rupees, and the mid cap fund recorded 15.2% decline at 2,808 crore rupees. Experts believe that this might be indicate investor opting for diversified hybrid funds rather than direct investments into specific market cap categories. This brings us to the rising popularity of hybrid funds, which saw overall AUM increase from 9.14 lakh crore rupees from 9.55 lakh crore rupees, backed by substantial net flows of 20,765 crore rupees. Arbitrage funds were clear leaders here, attracting 15,702 crore rupees inflows. Suranjana Boratkur from Mirai Asset highlighted that arbitrage funds are increasingly seen as a safer haven for temporarily parking funds. Himanshu Srivastava from Morningstar added that the market volatility and tax efficiency make arbitrage fund an attractive alternate to some short-term fixed income options. Thematic and sectoral funds also continue to attract investors' interest with inflows around 2,052 crore rupees. However, Vikas Gupta of Omniscience Capital advises caution, urging investors to be mindful valuations and price to earning ratios in popular sectors to avoid potential bubbles. And finally, from the AMFI data, the gold ETFs regained their shine, clocking an inflow of 292 crore rupees in May, a reversal from small outflow in April. Nehal Mesharam from Morningstar suggests that this renewed interest, driven by resilient gold prices and sustained global uncertainties, reinforcing gold appeal as strategic hedge for a safe asset. Now, let's shift gears to the market performance on June 10th. It was a day of consolidation with benchmark indices ending after a volatile session. The Nifty managed to take out a small gain of fifth consecutive day, holding on to a 5,100 mark. At the close, the Sensex down by a marginal 53.49 points or 0.06% at 82,391.72. The Nifty was just up 1.05 points at 25,104.25. The broader markets mirrored this sentiment, with the BSE Midcap Index ending flat and the BSE Small Cap Index up by a modest 0.3%. Looking at the Nifty's top performers, Grasim Industries, Dr. Reddy Labs, Tech Mahindra, Tata Motors, and Infosys were among the leading gainers. On the flip side, Trend, Asian Paints, Bajaj Finance, Tata Steel, and Bajaj Finserv were the major laggards. Sector-wise, the Realty Index shed 1%, while the IT Index was a notable gainer, rising 1.7%. The media and power indices also gained nearly 1% each. In specific movements, Protein e-government technology shares rose 3%, bagging work order with 100 crore rupees, while M&E Supermart shares fell 2% of following a block deal. Naip shares surged 8% after signing a licensing agreement with DRDO. What's the outlook? Rupak Dey from LKP Securities notes that the Nifty has sustained about previous consolidation zone, indicating a continued uptrend. He sees support at 24,850 and a potential move towards 25,350 in short term. Ajit Mishra from Real Broking describes that the market is taking a breather and maintains a positive outlook, suggesting buy on dips approach with focus on stock selection. Nothing has increased participation from auto, IT, and pharma sectors. Nagraj Shetty from HDFC Securities observe a consolidation with a positive bias and suggest a sustainable move about 25,200 could open a way to 25,600 with immediate support at 25,000 to 24,900 levels. That's all for today on QuanX News. Thanks for listening. Stay curious, stay informed, and I'll see you in the next episode.